So this past December that we went through in the stock market was one of the worst months in stock market history, and it actually closed out the quarter as one of the worst quarters in stock market history as well. But here's an interesting question to ask yourself, which is what I'll be going through today. How has the stock market performed after similar bad quarters in the stock market? Has the stock market typically outperformed in the next few years? Has the stock market continued to go down in the next few years, or do we remain flat in the next few years? Well, I'm going to present you some interesting data, and I actually think this will alleviate a lot of fear out there and will actually help you make more wise investment decisions in 2019. Now, if you guys appreciate a video like this, make sure to drop a huge like down below. Let's get 150 likes on this video, and don't forget to subscribe as well if you're brand new to this channel. But anyways, getting into the data here, we can see that this December was pretty much on track to closing the 14th worst quarter in the S&P 500's history. Now, at the time of this recording, the market sits at around a 17% decline for the quarter, and you can see it's almost as bad as 2008 during the recession, where we dropped almost 22% in a single quarter. But another interesting factor is that about half of these worst quarters happened around 1930, thanks to the Great Depression. So we can kind of treat those years as kind of an exception, as in reality it was the worst time in history that we have recorded for stocks. So now, since this past quarter was one of the worst in history, let's now see how the stock market performed after similar bad quarters in the past. Now, as you can see from this chart here, the performance for the majority of years after these declines have been incredibly strong. On average, 1 year performance was around 25%, 3 years around 38%, and 5 years around 91%. There's only been 2 out of 13 times where the 5-year performance was still negative, and both times, like I said, were during the Great Depression. Every other stock market crash, correction, bear market, or whatever you want to call it, has recovered with an average gain of over 90%. So based on this data, we may be setting up for an incredibly strong rally for the next 5 years. So it's important to keep things into perspective when stocks are down. So if this data right here does not give you confidence in long-term investing and why long-term investing works, then I'm not really sure what will. But anyways, what I found even more interesting was how small caps performed during the same times. So here's the Russell 2000, which comprises of small cap stocks. And these stocks are typically hit much harder when the market is hit or when we have a market crash. But on the flip side, these stocks could provide much more upside when the market recovers. So we can see here that this past quarter was the 4th worst quarter in the history of the index since 1979, where we're sitting at just under a 24% correction in the index. Now what we do is fast forward the following years, and we can see a similar story to the S&P 500, but the gains here are amplified. The 1 year is about 32% return, the 3 year is about a 73% return, and the 5 year is about a 130% return. And not a single one of these quarters was down after a 5 or 3 year period, which I found absolutely incredible. Now, I know I'm gonna get a lot of comments on this video saying things like, but Nick, this time it's different. This time we're gonna have a market crash. We're gonna be in a recession for a very long time. We're gonna be in a bear market for a very long time. So you shouldn't be buying any stocks right now because stocks are going down. Really? Well, what I'd have to say to that is every single time that we've had a similar crash, correction, bear market in the past, the stock market has always come back stronger. It has always recovered from this over the long term. And I don't believe this time will be any different. Remember, one stat to keep in mind every time that you're looking into an investment is that 100% of the time, the stock market recovers from its losses. And now every single one of you watching that's a long-term investor recognizes this, accepts this, and acts on this during market volatility and market corrections like we're experiencing right now. So now if this is you, if you're one of these long-term investors that's actually buying during these times of volatility, uncertainty, and fear, make sure to drop a huge like and make sure to comment down below and let me know as well. But either way, guys, it's a quick video just to kind of alleviate some fears out there. I know there's a lot of fear, there's a lot of panic going on with this market correction. So just keep this in mind, reference this video whenever you need to, share this with a friend who's also in a similar situation that's kind of freaking out here with this market correction. And guys, I know that past does not reflect future performance, but based on what we've seen, we have a lot of data supporting the upside here in the long term. Thanks for watching, guys. Hope you enjoyed this video. Don't forget to invest positively. I'll see you in the next one.